You've probably heard the statistic. Women earn 82 cents for every dollar a man makes. It's the gender pay gap, and it's everywhere. News articles, political speeches, corporate diversity initiatives, everyone cites it. But here's what nobody talks about, and what I'm going to show you today. There's a gap that's way, way larger, and it's been hiding in plain sight for decades. The gender wealth gap. And while the pay gap is significant, the wealth gap tells a completely different, much more urgent story. So if you care about financial equality, or you're curious about why some people accumulate wealth faster than others, please subscribe to the channel. We dive deep into money, inequality, and the strategies that actually close gaps. Let's start with what everyone knows, the 82-cent statistic. According to the most recent data, women earn about 82 cents for every dollar men earn. Now that's a problem. Over a 40-year career, a woman earning 82 cents on the dollar loses hundreds of thousands of dollars in lifetime earnings. But earnings and wealth are not the same thing. Earnings are what you make. Wealth is what you keep, what you own, what you've accumulated over time. And when you look at wealth, the picture becomes shockingly different. Here's the number that almost nobody mentions. Women hold approximately 32 cents of wealth for every dollar of wealth that men hold. 32 cents. Not 82. 32. That's a 68-cent difference between the pay gap and the wealth gap. That gap exists because of one fundamental reason. Men invest more than women do, and they start investing earlier. That's not an opinion. That's what the data shows. And it's the key to understanding why closing the wealth gap is so much harder than closing the pay gap, but also why investing is the fastest way to actually close it. Let me break down the math, because this is crucial. Imagine two people, both earn $100,000 a year. Perfect pay equity. No gap there. But one person spends $95,000 a year and invests $5,000. The other person spends $98,000 and invests $2,000. Over 30 years, assuming a 7% annual return, the first person has accumulated over $900,000 in invested wealth. The second person has accumulated less than $400,000. The gap isn't in what they earned. The gap is in what they kept and where they put it. That's a simplified version, but it's exactly what's happening at scale across the entire economy. Women and men might be closing the pay gap slowly, but because women have historically invested less, saved less, and had less access to wealth-building vehicles, that wealth gap compounds year after year. Every dollar that goes uninvested is a dollar that doesn't grow. Every year you don't invest is a year of compound growth you never get back. So why do women invest less? There are several reasons, and they're all worth understanding. First, there's the confidence gap. Studies show that women are less likely to invest in the stock market because they feel less confident about their financial knowledge. Men, on average, are overconfident. They invest more, even when they have the same knowledge. That overconfidence, believe it or not, actually works in their favor when it comes to wealth building. Historically, women have had less access to investment information, to financial advisors, and to the professional networks where wealth-building strategies are discussed. The third reason is that women tend to be more risk-averse, which is often framed as caution. But when it comes to long-term wealth building, conservative behavior means slower growth. But here's the critical thing. None of these are reasons to accept the wealth gap. They're obstacles, and obstacles can be overcome. In fact, they're already being overcome. Women are investing more than ever before. Younger generations of women are opening brokerage accounts, buying index funds, and putting money into the stock market at record rates. And when women do invest, research shows they actually outperform men. They trade less often, which means lower fees. They do more research before making decisions. They're more disciplined about rebalancing. They have lower overall costs, and they achieve better net returns. So women aren't bad at investing. They've just been investing less, and that's starting to change. Now, let's talk about why investing is the fastest way to close the wealth gap. Income has limits. You can only work so many hours. You can only earn so much in a salary. But investment returns are unlimited. Money makes money. A dollar invested at 7% annual returns doubles in roughly 10 years. Double again in another 10. By year 30, you've turned $1 into more than $7 just from compound growth. That's the power of the market. And here's the beautiful part. It doesn't care about your gender. The stock market returns the same 7 or 8% to men and women. The only difference is whether you're in it. So let's look at this practically. The gender pay gap, the 82-cent statistic, is being closed through legislation, awareness, and cultural change. It's slow, but it's happening. Over the next 20 or 30 years, pay equity might actually be achieved. But the wealth gap, that's going to take longer because it's compounded over decades. A 20-year-old woman today starts with less accumulated wealth than a 20-year-old man, on average, because of the years of investment decisions made by previous generations. That gap is built into the system. But here's where it gets interesting. If that 20-year-old woman starts investing today, and she invests more aggressively than her male peers, she can actually catch up. She can close the gap herself, for herself. She doesn't have to wait for legislative change or cultural shifts. She can take control of her own wealth accumulation. That's what the data is starting to show. Women who invest early, who invest regularly, and who invest in growth assets like stocks and index funds build wealth faster than women who wait or who play it safe. And they're starting to close the gap themselves. This is why the wealth gap conversation is so important. Because the pay gap is about fairness in income. The wealth gap is about power and autonomy and long-term financial freedom. If you earn more, but you don't invest, you're trading your time for money forever. But if you invest, you're building an asset that works for you, that grows without your effort, that multiplies over time. That's how wealth is actually built. That's how people become financially independent. And right now, more men than women have accessed that tool. But that's changing. So here's what I want you to take away from this. The 82-cent statistic is real, and it matters, but it's not the whole story. The real story is the wealth gap, and the real solution is investing. Not just equal pay, though that matters, but equal access to investment knowledge, equal confidence in market participation, and equal willingness to take the calculated risks that the market requires. If you're watching this and you've never invested, or you've been hesitant to invest, this is your sign. The fastest way to close the wealth gap isn't to wait for your paycheck to increase. It's to make your money work for you. And if you found this insight valuable, please like the video. It helps us create more content that goes beyond the headlines and tells you the stories that actually matter to your wealth. Let me also address something I know some of you are thinking. Doesn't the wealth gap also reflect differences in family wealth, inheritance, and accumulated assets from previous generations? Yes, absolutely. And that's exactly why investing matters even more. Because if you're starting from behind, the only way to catch up faster is to let compound growth do the work. A lower starting point doesn't mean you can't build wealth. It just means you need a faster growth rate, which means you need to be in the market, invested in growth assets for the long term. The data backs this up. Women who have invested over the past 10 years have seen their wealth grow at rates comparable to men, sometimes faster. The gap that exists is primarily a gap in participation, not in returns. Women who are in the market are doing well. The problem is that fewer women have been in the market historically. That's changing, but there's still a gap. And closing that participation gap is how we close the wealth gap itself. Now, I want to be clear about something. I'm not saying that women should just invest their way out of systemic inequality. That's not fair, and it's not realistic for everyone. But I am saying that for the women who have the ability to invest, who have income after expenses and basic emergency funds, investing is the single most powerful tool available to close the wealth gap themselves. It's faster than waiting for legislative change. It's more reliable than hoping for higher raises. It's the one tool where the rules are the same for everyone, regardless of gender, and where the returns are real and measurable. Let's also talk about what closing the wealth gap would actually mean. It would mean more women with investment portfolios, more women as shareholders in the economy, more women with passive income streams, more women with the financial security that comes from owned assets rather than earned income. It would mean more women able to retire early, to take career breaks without financial panic,
to negotiate better salaries because they're not desperate to keep their jobs.
It would mean more women starting businesses because they have a financial cushion. It would mean more women with real economic power, not just earning power, but wealth power. And here's what's really interesting. The companies and funds that are paying attention to this trend are already positioning themselves to capture the massive wave of women moving into investing. They're creating financial literacy programs for women. They're building investment apps designed for women. They're highlighting the data that shows women investors outperform. Because there's money in it, literally. The wealth being built by women investors is growing, and that's creating opportunity. So let's circle back to why this matters to you. Whether you're a man or a woman, whether you've invested before or never, The story of the wealth gap is the story of how money compounds and how time matters. The sooner you invest, the faster you build wealth. The longer you wait, the more ground you have to make up. The statistics we're talking about here, 82 cents, 32 cents, they're about real people with real financial lives. And many of those people, especially women, are realizing that they have more control than they thought. They can close their own wealth gap, regardless of what happens with legislation or cultural change, by making one decision: to invest. The gender pay gap is a story about fairness in the present. The gender wealth gap is a story about inequality compounded over time. And the solution to the wealth gap is investing. Not investing more aggressively or recklessly, but consistently, regularly, in diversified assets, over decades. That's how wealth is built. That's how gaps are closed. And that's the story that doesn't get told enough. If you're thinking about starting to invest, or if you've been on the fence, I hope this video has given you some real reasons to take action. The market doesn't discriminate. It grows for men and women equally. The only difference is who's in it and who's not. And if you're not in it yet, that's something you can change today. So please, if this has resonated with you, subscribe to the channel. We talk about money, about inequality, about the real drivers of financial success, not the statistics everyone repeats. And let me know in the comments, what's been holding you back from investing, if anything? Is it confidence, knowledge, risk tolerance? I'd love to hear your thoughts, because your experience is part of this story too.